Is the current dilemma of fraudulent and unlawful behaviours surrounding builders' warranty insurance and surveyors' certificates of professional indemnity insurance actually an obligation of the Australian states and territories? This has been an ongoing problem. Does this make it a contingent liability to the states that should be accepted, qualified, and reported in its annual reports? My name is Fiona, and tonight's question is not just for the building consumer, but for the building industry, as well as the insurance industry and the state government. Here are some facts and background information on the building industry that has been left to self-regulate. After vast consumer detriment, financial loss and emotional loss, 2 surveys, one in each state of South Australia and Victoria, are happening concurrently. Both are looking at the poor performance and poor compliance with respect to the fraudulent insurance certificates, illegally uninsured building works, builders' warranty cover and the limitations, removal of fixed-priced contracts, introduction of cost escalation clauses. Looking from the helicopter view, as I do, it exposes yet another industry allowed to self-regulate at the expense of the community. Consumers have become collateral damage to an industry that has been given too much credibility in the market and overreach at the policy table. This adds yet another brick in the wall of distrust for the regulators and the policymakers, and rightly so. What are the heads of government and their people thinking? The community has lost all confidence in the broken systems and the botched strategies. They only want what they paid for. They're not asking for handouts. They have no faith left in the 30-something policy advisors who have never built anything in their lives. The electorate will vote with their feet eventually, forcing all politicians and government to refocus on the primary task of governing for the people of the state, putting people first. So let's look at what a contingent liability could mean in this instance. So it's about potential loss and warranties, and in this context it would be those families that have been damaged by the lack of builder's warranty insurance and or the fraudulent insurance certificates by either a builder or a surveyor. Is that all, or is there more? The number and the extent of harm or damage is unknown. The quantities are unknown, at least to us. But I bet the calculators are running hot across all government offices, including the Auditor General and the Ministers for Building in each state and the Ministerial Forum for Building in Canberra. There are 3 big questions here. 1, who is liable? 2, who's going to take the hit or who's going to pay? 3, how big is it? We'll probably never know. To find out who's liable, there's another set of questions we have to work through about the process of who ultimately controls that process. So, firstly, who makes the rules? Who has to abide the rules? Who oversees the rules? Who breaks the rules? And who oversees those who break the rules? Quite simple, really. Looking at this table I created, these are educated guesses and subjective numbers because there is no way to quantify the influence of a particular interest group and the like. With a common sense approach for this exercise, we accept as a given that the domestic building industry is 100% of the market and is made up of Mr. and Mrs. Jones, MMJs, and they are unsophisticated investors. They're not property developers. There are no surprises here. The consumer pays 100% of the costs and has 2% of the say on how it works. The rules don't just magically appear. The agenda, The agendas and the rules are developed by heavyweight industry lobbyists with an influencing factor of here allocated 32%. And then they're implemented by a lightweight and light touch regulator. So the liability elephant in the room is, it appears, to be the government and the regulators. So what does all this mean? Well, this may be why the state governments are currently taking the hit or paying out for the recent Porter Davis and the Felmary Homes debacle. No builder's warranty insurance when it's mandatory. Fraudulent certificates of currency, certificates of insurance no less, which is obviously by definition unlawful. In Victoria, the mandatory insurance is covered by a ministerial order. So really, who is stiffing who? It looks like a straight-out wealth transfer from the building consumer, that's you, to the building industry and its surrounds. So thanks to a light touch regulator and government, you will pay, firstly, when you bought the house, then when the government pays you again because they mucked it up, because your money is really their money, is our money, is their money, and 3, again, when you get it built through rebuild, through the new builder's warranty and the permit levy system. It's just a wealth transfer. It's just a giant Ponzi scheme. Action items. Remember, you only want what you paid for. You're not asking for a handout. Take a deep breath. Respond to the surveys where you can. Write to your local member, your state minister for building, the federal minister for building, Katie Gallagher, and your state building regulator. We've run out of time. So we will finish the issue of contingent liabilities, who's going to pay, and the annual reporting, which is incredibly important, in the next couple of videos. We have a big one coming up on 3 concepts that may be useful to you, and they are non-feasance, misfeasance, and malfeasance. Check those trusses, stay safe, and I'll talk to you soon.